Still, I think it's the worst time for us to do this panel because we're 1 hour late and all of you hungry. And we are the only thing that keeps you from lunch. But I think that you will not regret sitting here because we have money panel. We have people from private equity. And they think usually the most accurate in terms of what's happening in economies because they work on the ground. They see various industries, various businesses, and they can really say whether investment climate is improving or not. We have Daniil Pasko. Daniil will introduce himself further and will talk about himself more. We have Makar Paseniuk. We have Jason Palmer. You already know Jason. And we also have Vladislav Sochinsky. I'm sorry for mispronouncing the surname. By the way, yesterday we discussed that first thing what we need to do to make relationships UK and Ukraine closer, we need to change visa regime so that visas are issued faster. Because of it takes too long, we don't have 2 speakers today. They had to stay in Ukraine. Again, since we have private equity panel, 2 people from private equity, IFC and Citi, which is corporate banking, I will ask them to make an elevator pitch, very short pitch. And you know, elevator pitch is the time it takes from ground level to the top level to speak with your boss and explain who you are, what type of business you manage. Very, very shortly. We will speak about opportunities in Ukraine more. 30 seconds, 1 minute max. So Dan, we will start from you.
Thanks, Adomas. I should have read your email, right? About the elevator pitch. But hello, everyone. It's a pleasure to see you. And thanks for coming. Sorry to be the something which prevents you from going to lunch. We'll be fast. And I hope my 30 seconds didn't start yet. My name is Dan Pasko. I'm a co-managing partner of Diligent Capital Partners, and we found this private equity startup with Mark Ivashko, who was one of the founders of Horizon Capital and its chief investment officer for 16 years. We were fundraising for the last 3 years. It was very tough, but we succeeded. And now we are deploying our capital. Yesterday, we announced our second deal, which is Allseeds. It's agribusiness processing and logistical hub in the Yuzhny port, which is the deepest Ukrainian port. If I'm speaking about my elevator pitch, I would say that it's probably the best time to invest in Ukraine because there are strategies and opportunities which are hedged from relevant Ukrainian risks. And there is almost no competition for those opportunities and those deals. That means that private equity managers can acquire them or enter at valuations which are unbeatable versus any other markets. That's what makes it attractive, and that's why we operate there.
Excellent. So I guess it's me. My name is Makar Paseniuk. I'm one of the managing partners of ICU, a Kyiv-based investment firm that, among other things, has asset management. We are lucky to be a multi-class asset manager. We manage in excess of $500 million. We don't have a private equity dedicated fund, but we every now and then do private equity, either as a result of spillover from our one of our core strategies, which is distress debt, or make investments which we believe are sound. Before I go into the elevator pitch, I would like to thank, be polite and to thank organizers and especially the host of this event, EBRD, which does a very important and great job in supporting Ukraine, supporting Ukrainian money managers, not ourselves, but a number of others, and supporting Ukrainian companies in terms of gross capital and debt. And does a lot of very useful things which may be underestimated at the moment, but I'm sure the appreciation will come later on the macro front and the reform front. In terms of elevator pitch, my background is investment banking. I've been working in the region since 1998, and being at a later stage a Ukraine-focused investment banker, I've seen a lot of investments being made or a lot of exits being realized, and had a privilege of helping a lion portion of those. And I would agree with Dan that now is a good time to invest, but I guess in Ukraine, but I guess it comes with a macro pitch that it's usually not a bad idea to invest after the major macro shocks, just like Ukraine has experienced in the last 5 years. In terms of asset classes, because we have a luxury to be cross-asset class in a number of our strategies, we have a luxury to compare where we would deploy our capital and where the return is can be the highest. At the moment, we still believe that distressed data is a very good opportunity in Ukraine for two reasons. Reason number one, there is a momentum to deal making, and there is an impetus to do deals on the side of the state, which holds a lion portion of distressed data that it inherited from defunct banks. And on the part of commercial banks, which are still cleaning their balance sheets. So there is a momentum in deal making, and you as a buyer of private data have a number of options on how to work it out. And the consensual scenarios typically would lead to situations where A, you would decrease leverage for the company, B, you may provide additional capital for growth and recapitalization, making the balance sheet stronger, and thus, hopefully you do it with market leaders, and you make them stronger and in better position to grow primarily through acquisitions. I guess that's it. But we're not fundraising.
No, perfect. Very broad explanation. But I do understand that since you're boss yourselves, you're not delivering elevator pitch, you're just listening to them. Or you have very slow elevator.
I'm typically very slow, so it takes time.
Or just a tall building with a lot of floors to carry. But so I think I've been introduced previously. I'm the IFC's regional country manager for Ukraine, Belarus, and Moldova. But a little flavor on kind of more IFC and our approach towards private equity. IFC is the single largest private equity investor in emerging markets globally. We have $6 billion US committed in over 300 funds. And how that pertains to Ukraine, the way we, again, see private equity, it's a way of closing a financing gap. And I think we've heard that access to capital is one of the key challenges for businesses in Ukraine. And so we, as a large institution, can approach SMEs via financial intermediaries. And that's why we do invest in funds. In Ukraine, we've invested in Horizon, which just went through a very successful fundraising. They had a target of 150 million, and they're oversubscribed. Another reason why we invest in private equity is the creation of jobs. I think we've calculated that we've created over 300,000 jobs globally by virtue of our investments. But I'll keep to my 30 seconds, and hopefully we'll have more time later.
Vladislav.
Yeah, okay. Thank you for having me here. My name is Vladislav Sochinsky. You can call me Vlad, the short version. I have a little bit limited exposure to the private equity, but because being on the public side of the capital markets, but I have some quite long experience seeing the the development of the infrastructure and the environment where the investors, internal investors, external investors, they need to operate in the country, being either corporates or being really the investors, portfolio managers. And I see right now, really, I fully echo to my members of panel, that this is really the time where you should start thinking about to look to Ukraine more closely, and the big value is coming. And it is always interesting to buy Ukraine. It's just a matter of timing, the right timing when to do it. And we saw quite big interest from the foreign investors who started to come back to the Ukrainian government bonds market. We saw the Ministry of Finance was quite happily attracting a good amount of money in the last half of previous year and in the first half of this year. Now we think it's kind of the technical momentum where we see that the flows are not really rushing to the market, but it's probably just a matter of time.
Thank you. Before we're going to speak about investment opportunities, I wanted, Makar, you to very briefly describe the private equity industry in Ukraine, the size and key investment strategies, leverage buyouts, growth equity, or traditional equity.
Well, I'm not sure I would be the best person on the panel to do that because I will be basing my comments and my description on my experience and interactions with private equity firms active in Ukraine. I think that since Ukraine's independence, most private equity firms have struggled to make money for their investors, unfortunately. There are only a handful of funds or firms that succeeded. This is due to a number of macro shocks that have happened in the system. And I guess the portfolios that were built at the wrong time and in the wrong industries to be more resilient to those macro shocks. Whatever people say, private equity is all about macro to start with, and definitely about timing. The private equity industry, in terms of dedicated funds, is still very small, almost non-existent. And I'm very happy to see, as an ex-investment banker, that people like Dan are broadening the number, or expanding the number of players active in the industry. But in terms of committed capital, raised funds, I would say that it's still much less than $1 billion. In terms of strategy, I guess the asset managers struggle to identify opportunities where realistically they would make money, because all of us want to invest into successful businesses that make money already and have a proven track record. But guess what? When it comes down to actually trying to give them capital or to buy a portion in secondary transactions, they would have difficulty transacting at the moment, because if they're rational people, they would understand that now is probably not the right time to sell, because as we just heard, everybody's saying it's the right time to buy. And and this is one of the challenges that the private equity industry faces. In terms of sectors that make sense, all the investments that have a potential of making money, I guess, at this stage for private equity players in Ukraine, those sectors or those companies are seriously considered, because, as I said, the supply is not that great. In terms of broader economy sectors, I would say that sectors where Ukraine as a country has global competitive advantage, those sectors make the most sense. And it's sectors that, agriculture, infrastructure plays because of Ukraine geographical location, logistics, metals and mining, but unfortunately that sector is consolidated and it's difficult to get in, but still makes sense. And And probably the last one is a technology because of Ukraine's potential and educated labor. So my view, unfortunately, is that yes, we all need investments, but at the same time, the investment products in which you can invest are quite limited. And I've been vouching over the last 4 years for the state to take a more active role in forming those investment opportunities, because only by creating those opportunities you can sensibly talk about the wave of or a potential wave of investments or increase in FDIs if we're talking about strategic investors or private equity investors. And given my view is that given the recent decentralization reform and reforms in the regulated industries where local communities have more power to set tariffs and to thus create investment opportunities, state should be spending a lot of or should be spent making an effort to create those, be it in recycling, be it in local services, be it in alternative energy. And if you see what is happening, in terms of inflow of investments, alternative energy, the sector that has been created from the scratch, attracts the most of the inflows that come into the country, both in terms of equity and in terms of debt. Why? Because it makes sense, it is there and it's investable. So I guess to conclude, private equity is good. There should be more of it. However, I would not get carried away with big numbers that can be deployed. And to deploy the big numbers, I would encourage the state and people that represent the state at different levels to be more proactive in creating the investment opportunities for people like Dan, for people like ourselves, for IFC, and all the people that are still waiting on the sidelines and looking at inwards into Ukraine.
May I add a few words to that? I think Makar was absolutely right in giving some numbers. So we did recently the calculation of the capital under management, and it's true that in the portfolios it's from $1 to $1.5 billion in the private equity landscape, just like Makar said. And even that versus the standard benchmark of private equity universe to the GDP is at least twice lower than in any comparable country. But interesting thing is this from 1 to 1.5 billion under management is had been deployed more than 5 years ago. So if we're looking at dry powder under management, then it's well below $500 million. And that is a number which is significantly lower than any benchmark. So in our view, there is rooms for several more times private equity capital to come into the country. I think Makar was also right in terms of the size of opportunities. In my view, it would be problematic to deploy large checks. So it would be good if a larger number of smaller funds enter, which deploy from 5 to 20 million, then a smaller size of a large funds would enter, which had to deploy 40 to 50 million per deal. That would be a problem. So in my view, still there is a lot of opportunities, but opportunity is on a smaller scale and on a larger scale in terms of the checks.
Why don't you continue? You said that there is around 500 million dry powder. It must be more, but let's stick with 500 million.
I'm not taking into account IFC and EBRD. I'm just thinking about independent private equity managers.
Well, of course, I do understand that they have billions. Where would you invest this dry powder that's available in Ukraine? Or what type of sectors? If you can specifically, we don't need names of companies, but specific companies if possible.
Well, why don't I speak where did we invest? I think that would be a better way to address this. My favorite industry is agriculture and agribusiness. And when I'm talking about agriculture, I'm not talking about farming. I'm talking about the whole food and agribusiness value chain. So everything which goes in, meaning seeds, machinery, fertilizers, equipment, storage, etc. Farming, processing, logistics, trading, and everything up until it gets to the table. So that's my favorite industry. The reason why it's my favorite is because on a global level, I just see a long-term supply and demand misbalance. I see that the world is going to consume or as much or more food than it consumes now, and there is a risk to growing supply, because I don't think that supply can kind of substantially grow, or there is a risk to supply because of the climate change, etc. So on a global scale, it's a very attractive industry, but it's a commodity industry. So in a commodity industry, where do we look for? We look for low cost. And here, Ukraine is probably the most attractive geography in the world, and it's driven by two reasons. Number one, it's a low cost of production on the field, meaning if you take all the cost, land prices, fertilizers, seeds, etc., and you convert it into dollar per ton, you see that on most agricultural commodities, the cost on the field per ton is in Ukraine is one of the lowest if you benchmark to any global competitor. But then the second component is logistics, and logistics to deep water port is key. Ukraine has a very short logistical shoulder from any position in Ukraine to deep water ports, usually Odessa, Nikolaev, or Ilychevsk. So in a combination of short logistics and low cost of production in the field, make it a very attractive opportunity. The investment we made, All Seeds, is infrastructure operator in one of those deeper ports, usually in the deepest water port, which can actually load Panamax and Cape-size vessels of up to 100,000 tons. It's processing vegetable oils in the deep water port, so being rapeseed oil, sunflower oil, soybean oil on a large-scale plant, and it's transshipping both its own products and third-party products on deep water vessels. The location in the port gives it around $20 per ton of cost advantage if you compare to any processing factory inland. So this logistical advantage gives us a cost advantage in terms of competing with other processors for raw materials, and it's competitive in terms of logistics. So that's the investment we made. We acquired a 16% stake. The company has around $200 million of expansion projects. So expand its processing capacity. We invested in expanding its transshipment capacity. Also, a lot of value-added products on top of the raw materials it has. So lecithin production, pasteurization, deuteration, bottling, etc. So that's what I'm talking about when I'm talking about agriculture value chain. So not just farming, but the whole value chain is my favorite industry. Besides that, I think that anything export-oriented, anything consumer good, which then can be export-oriented, is attractive. But agriculture is my favorite.
Makar, you discussed about possibilities with distressed assets. Can you give more concrete parameters of such potential transactions?
Well, we've been, we as a firm have been specializing in distress pretty much since inception. The first wave of distress came on the back of a global collateralized mortgage crisis and subsequent correction that took place in Ukraine back in 2008, 2009. At that time, we focused primarily on domestically issued publicly traded debt instruments. We spent a year or more accumulating those, and 2 years subsequently on working those portfolios out. Be it through litigation, be it through consensual restructuring, debt to equity conversions, the whole toolbox. This time around, given that there were not that many publicly traded instruments due to the fact that the capital markets, domestic capital market, dried out, we focused more on internationally traded debt instruments, primarily Eurobonds, not primarily, Eurobonds, and bank debt. We have bought a number of portfolios that were auctioned by international banks that were reviewing their strategy towards Ukraine. Or if not reviewing the entire strategy towards Ukraine, then just cleaning their balance sheets for capital adequacy reasons. So we spent 2014-15 actively acquiring those portfolios. Subsequently we did acquire bits and pieces, but it was not as massive as in 2015. Now we're at the stage of exiting those portfolios. We have exited a number of investments successfully, but I think that pretty much supply of corporate debt from those sources is over. The state guarantee fund is the biggest potential supplier, and there are people in this room that are actively working with the state guarantee fund to help them dispose of those assets. In terms of nominal values, we're talking roughly $25 billion in equivalent, in hryvnia equivalent. Even if you attach a 10% market value, we're talking about $2.5 billion, so it's substantial. And even if you want to narrow it down and be choosy and take 10% of that, we're still talking about $250 million in potential capital that can be deployed there. So the numbers are quite impressive. The quality of the assets, unfortunately, is much less impressive, and which should be reflected in the price, obviously. But what is more important for deal making is that there is an impetus to and the need to get rid of all these assets for the state guarantee fund, and whatever happens, those would be sold. Who's going to buy them, remains to be seen. How much would be paid remains to be seen, but this is a potential immediate opportunity that is happening as we speak, because some of the auctions have been announced. And for people willing to take risk, those are immediately actionable opportunities in the Ukrainian alternative asset space, so to say.
May I just ask, how exactly do you create value in this? Because I still do not understand. Are you buying, repackaging them, and then selling, or are you waiting?
It's all very simple. You have a debt that you are able to service or not able to service. But the debt is held by Dan, for example. And Dan wants to sell the debt because he, for whatever reason, cannot hold your debt anymore. He's tired, fed up with you, or he just needs to sell because of his asset liability management issues. So he sells the debt, which I acquire, at a price lower than its nominal value. I come to you and say, Adomas, I understand that you have an issue servicing your debt. The schedule is wrong, the amount is wrong, and but you're a very good guy. So I'm going to help you. I can restructure the debt, so extend the maturity, do the grace periods, and it all depends on your situation and my understanding of your situation. Or I can come to you and say, I'll provide you a haircut and we'll restructure, the balance for a period of time. Or I can come to you and say, well, Adomas, this is a debt claim, but your company is doing great, needs capital. So what we're going to do is that we will leave a portion of that as a debt claim. We will convert the remaining portion into equity, and on top of that, I'll give you some fresh cash. So you can grow your business, expand your working capital or spend it on M&A, and we would be partners. Of course, some of that you will like more than others, but it's a matter of negotiation. Or you can say, I don't want to do either one, and then we go into litigation and full guns blazing, and we are, and things like that do happen. We spent a lot of, over the last 3 years, we have like 5 or 6 arbitral, cases happening here in London, and God knows how many court cases in Ukraine on different cases. And this is why I was saying that yesterday. I was saying yesterday that the rule of law is important, and we as practitioners on the other side see that the reform of the judicial system in Ukraine has started bearing fruit, because 7 years ago, when I was in the same business, to be winning legitimate cases like that was very difficult, if not impossible. Now we jointly with EBRD 2 years ago have seized the asset which was pledged as a collateral for a debt that we jointly held, for which we had to go through 2 years of litigation in Ukraine and internationally, but it did happen. And we as, again, practitioners are seeing that in the field which is called distressed debt, the reputation of the country is improving, and it's also, apart from our prop investments, is proven by the advisory role that we had in Mria case and in a number of others. So it's all good, and the climate is improving.
Maybe just picking up on some of those themes. So I think distressed assets is we heard the numbers, right? There's enough to go around. I think the issue there is the judicial reform that was discussed previously, and trust in the courts, because if you do end up in a situation where you can't reach agreement with the borrower, you're going to the courts. In addition to that, there's some other pending legislation, the creditor rights protections, which we hope will be passed by President Poroshenko before the close of this calendar year. But that being said, distressed assets is a very interesting segment for private equity to play. I think Dan was talking about value-add agri. This is an area where we do need additional equity investment as well to carry these programs forward. And I don't think IT was discussed, and IT. These are smaller investments, but incredible potential. You have 3% of Ukraine's economy right now is driven by IT, and it has the potential to grow significantly more. So I think another area for private equity to engage, provide the capital to small companies, innovative companies that will hopefully come to scale.
Okay, one maybe follow-up question. Our panelists discussed that government should also work so that government helps to create potential for big investments. Most likely we're referring concession or maybe other things. What do you think the government can do to create those projects so that investors, big investors would come?
So to me, I mean, the concession law could be very important for the country and bring in the real money, right? So now we're not talking about a $150 million fund. You're talking about billion-dollar projects. Is that the place for private equity? Maybe as a minority investor, but that's bringing the strategic investors who are bringing not only capital, but expertise and wherewithal in the sector. So I think the concession law is important. Improving the investment climate more broadly, which is an area where IFC is very much engaged as well. Judicial reform. I mean, this is what investors want to see. But I'm not advocating that there's a need to wait. I think that we are seeing investors succeed in Ukraine today, but there will be much more capital coming into the country in the event that these things are undertaken by the government.
Vlad, people on my left, they provide equity. You provide debt. Maybe you can also talk about what type of business do you do with debt in Ukraine?
Yes, and I would like also to comment what government or probably the central bank as regulator of the market they can do and what they are doing last years, because I heard that you discussed some particular cases about restructuring or debt sale, and everything is happening outside of Ukraine. The question is, probably it's not just about the legal system, which is far away from the efficiency in the country, but maybe because of the infrastructure and the, again, environment where the investors and corporates operate. We still had quite excessive or obsessive capital controls environment in the country, and sometimes, of course, it's not the main hurdle why we don't see these investments, but this is the other way. We are not as competitive as the other markets. So just, again, everyone likes big numbers. The outstanding debt of the government bonds in Ukraine is like 750 billion hryvnias, which is probably less than $30 billion. Half of this debt is owned by the central bank. Another probably 45% is owned by the banks, including state banks. And the foreign investors, they own just 7 billion hryvnias, which is less than 1% as of now. And you go to other geographies, and you go to the Eastern Europe, or you go to some other countries, and you see that the share of the foreign investors in the local debt from 10% to 45% to 50%. And the total stock and the total outstanding debt of the government is pretty low. I'm talking about the local debt. I'm not talking about the Eurobonds and international creditors. And I think that the purpose of us talking to investors as a bank, we're a primary dealer for government of Ukraine. According to the Ministry of Finance rankings, we're probably number 3 if you take all together government, local currency and foreign currency domestic bonds, and we're number 1 for the local currency bonds. So we talk a lot to investors, and I have good news for you. The guys who are really watching closely the developments in the country, they are already on the slow and low start. It's just a matter of timing. The central bank, they did a big really job in changing the environment, and recently they approved this law on the foreign currency, or the currency law. We used to operate last 25 years in an environment which was regulated by the old decree of cabinet ministers 1993, and it was really kind of the Soviet era legacy. In Soviet times, it was really criminal to own foreign currency transactions, and that's why we should control it, and everyone who is involved is not a good guy. Now we're changing, and now we say that there will be the new law. We also expect that the next step, we will have probably the development of the derivatives market. Because if you look at the current stage of the capital markets in Ukraine, I call it very politely, we're at a very embryonic stage of the market's development. Because we don't have any tools for investors who would like to hedge their exposure. I'm not talking about the credit exposure, I'm talking about the market exposure, interest rate or foreign exchange. They are very much limited. But investors, they don't wait, they create the offshore market. They created this Eurobonds market, so for Ukrainian corporates who want to borrow funds, they can go and do it on the external market, but probably they can do it here as well. If they want to hedge their exposure, they develop the offshore, again, the market for the foreign exchange exposure management, non-deliverable forwards market, NDF market, which is regulated outside of Ukraine. The question is, why can't we synchronize these markets? Why can't we integrate Ukraine to the global system? And we will live in the environment where investors can easily in and out. And it will be just a matter of the valuations. I like this trade, I like this investment. Okay, I don't bother at all how much documents and time I need to open accounts in the country, to repatriate this amount of the country, and so on, and the cost associated with these transactions. So the new law is coming. The Ministry of Finance, again, they did also quite a lot for the last probably 2-3 years. They really resurrected the debt market of the local government bonds. They started to run the consistency in the primary auctions. They started to have meetings with the primary dealers where we discuss on a quarterly basis the schedule of the auctions based on the interest from the clients and investors and the banks. So they are building really the platform where we can really derive the benchmark, the cost of money for the government, and based on that, we will start building other curves. We don't have corporate bonds market right now. We used to have it before. And believe me, the banks right now, they are not lending. They are not lending because in the past, they were not lending. They had a lot of money. But now probably they will be not lending because they don't have enough of money, because we're switching from the structural deficit of liquidity to probably the deficit of liquidity. And then the banks, they also themselves, the agents of the economy, they also need to create access to the funding. through the local market or through the external market. We learned a lot that the external market is fast, accessible, but there is a huge exchange risk. And we know that this, if you look at the current NPL in the banking system, which is around probably 55% or 45%, I'm confusing, but the majority of this NPL is coming from the foreign currency assets. So this is probably my pitch for those investors who would like to invest, and not only through the PE, but probably through the developed market. Pay attention that the country is really changing and is ready, and opening flows, not only on the way in, but also I believe it will be as easy on the out as on the way in.
Okay. Diana, I was always wanting you to ask one question. You finished Harvard Business School, received MBA, then you came back to Ukraine, you joined Horizon Capital. After Revolution of Dignity, you worked in the government, you were advisor to the Prime Minister, you were advisor to the President. You created Easy Business NGO that significantly improved or helped to improve business climate in Ukraine. And then you could leave to any country you want. But you decided to stay and create this venture that you're working on right now. What is the reason?
Well, that was such a wild ride. I enjoyed it so much, every single part of it. I think that emerging markets just give so much opportunity for young people who want to change the world that I'm excited by it, and that's why I came back. Every step of that journey, it was challenging. Joining Horizon was a great opportunity because Horizon, post-2008 crisis, had $370 million of dry powder to invest in the region, and we invested this fund, and it's the portfolio still managing. But for example, the investment which I managed, Bostavan Wineries, was recently placed on Bucharest Exchange, and the valuation was over $100 million. Horizon made more than 4 times cash on this investment. It was a turnaround. Should I fix my microphone? Okay. Does everyone hear me? Upper? Okay. Is that better? Guys at the back, do you hear me? If you hear me, can you raise your hand? Okay, good. So should I repeat everything I said on this panel? Okay. Sorry about that. That was exciting. Then when Revolution of Dignity happened and when the conflict with Russia started, it was a very challenging period, but that was the most interesting period of my life when I worked with kind of key people from government and from the civil society, and with my partners in Easy Business and other civil society organizations to help improve the situation. Again, challenging, but very interesting. And now, once the opportunity is back in the business sector, it's very exciting to be here. And actually, I think that for young people who have energy and ambitions, this is a place to be. I'm not saying that everyone should go to Ukraine. I would have to compete with them. So, but I think everyone has this market which he is excited by or she is excited by, and he or she knows how to navigate the risks of. And I think that's where the opportunity is.
We don't have much time, but perhaps a few questions. Yes, please. Do we have microphone?
Thank you. Ina Mitselieva, I'm president of the British Investment Group, and I'm head of the Ukrainian office. And just to come back to the topic of the discussion, because I'm waiting for any response to the risk insurance. And I didn't hear anything, and I want to comment something. If you will look to the direct investment to Ukraine, it's last year it was around $2 billion, and a year ago it was the $4.4 billion. And the long-term trends at around the 30%, between 30-35%, it's money for Cyprus. And it's quite difficult to say that it's direct investment, it's reinvestment of Ukrainian business money. And when our company came to Ukraine a year ago, and it was the first question how to protect investment, because you understand the situation in Ukraine and there's a lot of risks, and it was the first question about how to protect. And we did the political and economic risk insurance, and the first fund which was done for agriculture, it was the 52 million, and it was done with the political and economical risk insurance. And when I did research the topic, who did it here in Ukraine as well, but I didn't find just about a peak 10 years ago. It was the last insurance for investment in Ukraine, but nothing more. And I started to keep in touch with many people and think about how it's possible to do in Ukraine. And I found the opportunity which I connected with the European Commission. European Commission did the proposal for Ukraine a year ago. It's connected with Ukraine, Montenegro, and Africa, because they're interested to stop migration process for these countries to the labor market of European Union. And they did provide opportunities for Ukrainian companies who will attract investors to use guarantee for the European Sustainable Development Fund. And its amount, it's around €1 billion. And, but I did not hear it was just one information, and I did present on the it was discussion with the European Commission from Kiev and Brussels, but after that I didn't hear anything about such opportunities. It's not just one way, then you need to contact with the international financial institution which are working in Kiev, the EBRD, the IFC, and European Investment Bank, who could be provider of such guarantees from the European Sustainable Development Fund. But I think maybe the guys you hear something about, and because unfortunately we have not too many opportunities to protect any investment in Ukraine. Thank you.
Correctly, are there instruments available to protect investment from political risk? And the short answer is yes. IFC has a sister organization called MIGA, the Multilateral Investment Guarantee Agency, which is active in Ukraine, and they do provide political risk insurance. IFC, the way that it's meant to work is IFC takes the lead on the due diligence for the actual investment. And on the back of our due diligence, MIGA is able to provide such a guarantee product. You also made reference to some other vehicles that are being discussed, and I think should be available from the EU. That is also meant to cover, indeed, risk, but more at the project level. So I'm happy to put you in touch with the right people in Brussels. But in addition to that, the World Bank has a similar product at the project level, partial risk guarantees that could de-risk investment. This is meant to cover lending, so commercial banks, but it is also there to cover equity. We wouldn't cover necessarily a Ukrainian investor in Ukraine. We would expect that a Ukrainian investor would bear Ukrainian risk. So these are products that are meant to promote more FDI into Ukraine.
In our experience, both at Horizon and at Diligent, we never found those products to be particularly effective. We think that the best political risk insurance is a proper due diligence on the asset you're planning to buy, and there is ways to reduce your political risks, mostly kind of if you don't deal with politically exposed individuals as potential partners, or as somebody who you're buying the asset from. I think also an important aspect is making sure that your business which you invest in is transparent, is paying taxes, is not in default, is not fulfilling all the legislation. In our experience, that's the best political risk insurance, which reduces that risk. So that's what I advise to do mostly.
Dan is able to say that very confidently because he had as LPs IFC and EBRD in the structure as well, and that is an additional way of mitigating risk.
Any more questions? In that case, enjoy your lunch and thank you.
Ladies and gents, because we're running quite far behind, lunch has been cut down to half an hour, just so you know. So if we can all start to head back in at 2:30, but enjoy that quick lunch.